Well, hello everybody. It's Danny Deals here. Thank you for tuning in to another exciting episode of Un Poco Mas on behalf of executive producer Hurricane Lopez and supervising producer Stock Karen. We would like to say hello and welcome and welcome and hello. Guys, today I want to talk to you about Carvana CVNA. Guys, as I'm sure all of you are well aware, being loyal viewers of the Un Poco Mas broadcast, that I did a video not too long ago on the Carvana stock, where I told you the stock was a huge turd and it shouldn't even go back above $10, much less $20. But I said in the exact same video it could go up, for the exact reason that it was such a giant turd. Wall Street had shorted the stock to a completely irrational level, whereby any news would send the stock into an upward move due to a short squeeze. And lo and behold, guys, I think that's exactly what happened. The stock is up 2.5x from those levels, even higher, because I think the stock was down around 9 when I was flapping my pie hole, giving you guys some horrible, horrible predictions. But I was kind of right and wrong. I thought the company itself was not going to recover, that their promises are hollow, that there is no real path forward for the company. They're essentially insolvent. They have no unique selling point. They face a lot of competition. It's like the Kathy Wood reasons this company should exist. Machine learning, AI, we're data mining. It's all bullshit, guys. They're selling used cars. I mean, that's what this comes down to. They're selling used cars. So, taking a look at the chart, guys, 25 has been it's been a critical level. The stock has spent a lot of time there. It consolidated right at the beginning around 25. That was kind of the gravity there. And then the stock made a move up. The other times it's sort of 25 has been a critical pivot point. Is when the stock has had a major fall. Here it fell from 110 and stopped the bleeding right at 25. And then here the stock fell all the way from like 350, and again buyers came in right at 25. So historically there's been a lot of buyers in the stock. It traded right along that near that 25 level for about 2 months. Popped back up to 50, came all the way back down below, tried to retest here, I think, but only made it to about 15, came back down. And then, guys, we are retesting that 25 level. Now, if you notice right here, guys, the stock has been flirting with the 50-day moving average and keeps trying to break out above the 50-day. Kind of broke through down here. That was, a sort of positive catalyst for the stock, but then sold off back down. Again, broke through 50-day, came back, tested it. That was just today. And then, it's just flirting with that 50-day. It comes down. It wants to, it's largely staying above the 50-day moving average here, right at this minute. But in any case, guys, the Carvana stock, I don't believe there's that much of a path forward. A lot of analysts are just, oh, I know why I have this thing on draw. I'm just moving everything around. A lot of the analysts are beating the hell out of the stock. Personally, guys, I think, we're looking at like one of two scenarios here. The stock is either going to go up or down. I don't believe it's going to consolidate sideways at 25. Because there's just really no fundamental reason for it to be at 25. In my opinion, like, that puts a market cap on the company of $4 billion, and you can go, yes, they do a lot of churn, but they don't make any money. They've never made any money per car. They've entered into this new like loan sale agreement, but apparently it's going to be like a one-time benefit, and it is not going to make them profitable over the long term. Guys, they're getting blasted in the press. This is just one analysis of Carvana and why it's basically insolvent. Came on the scene in 2014. Their trademark innovation is a multi-story vending machine for used cars, guys. And this is the key point. It would have been simpler and much less expensive to have the cars at ground level and put the keys in a lockbox. Guys, you could have built like one of these things for commercials and for marketing purposes, but think about you're trying to sell cars. That's your core business, and you decide the way to do that is to build like giant glass buildings with car elevators. I mean, this stuff is very expensive, not just to build, to pay the leases on the ground in these major areas where they have them, but also to maintain, guys. Think about how much it costs to maintain those elevators, just clean all that glass, you know, fix it when it breaks. The maintenance on that building, those buildings must just be outrageous, guys. And the stockholders and the debt holders and the bond holders, you guys are paying for that garbage. And I know it's flashy and it looks really good when the company is growing really, really quickly, but it doesn't make you any more money. Nobody's going to pay more for a car because it was delivered in a giant glass box. Like how is that a convenience? I mean, are you a small child just looking at a shiny object? You want to know if you're getting a good car for the best price, it's good quality, it hasn't been in an accident, it's going to have a clean title, etc., etc. And if those elements are not there, you don't care if the thing's in a giant, vending machine, slot machine. Like I just don't think that this makes any sense for the used car market. I mean, frankly, it's a turd as well, but I would rather buy CarMax. I mean, at least they're, moving product and they make a little bit of money on each car they sell because they always sell those damn warranties. And they just have higher margins on the cars. They, it's just my opinion. I think CarMax is again a giant turd of a stock. I just don't love the used car business, guys. And everybody's talking about, these businesses are going to be doing so much better because used car prices are starting to go up and yada yada yada. But guys, at the end of the day, there's a lot of competition in this business. There's high margin or low margins. Rental car companies sell their own cars into the used market. New car dealers sell a hell of a lot of cars into the used market. And let's face it, guys, the new car dealers have a huge advantage because they don't have to go get all their cars wholesale. They get cars, traded into them that they get for a song. They give people crap money on their trade. They're already selling another product. So, frankly, I'd rather buy like Ford or, I'd rather buy Tesla, even maybe not at this current valuation, but I just can't see buying the Carvana stock, guys. The Carvana stock, it's just gone up 2.5 times. I think if you take profits now or if you got in, at the right time, you'd be doing very well. Of course, Investor Place, they're talking about the five most shorted stocks. Of course, number one is Carvana. This article is just very recent from like today. This meme stock has seen an impressive surge lately, but it's currently boasts a short interest of 48 million shares, which accounts for 58% of its float. Guys, what a short there is on the stock. Let's take a look at the live short interest. What happened today? Of course, the stock was up 6% on the day. The borrowed change return share is 1.65. So it was actually shorted a little bit more today. The cost to borrow was as high as 12%. If we take a look at the overview, we're talking estimated short interest 64%, including the dark pool, down just 1% from 5 days ago. But the free float on loan has gone down considerably, leading me to believe that some of these shorts are hedging now. They're short long, they have their own shares to cover with. How do you interpret that, guys? Free float on loan down 11%, short interest only down 2%. Let me know what you think down in the comments, guys. Cost to borrow's been pretty steady at 10%, utilization remaining steady at 100%. Guys, that's the Carvana stock. The stock really likes this $25 level. I never thought it would get back up here because I just don't think it makes any sense. I think they're insolvent. They're trying to force their debt holders to take a cram down because they simply cannot meet their obligations. I think they're going to use certain accounting gimmicks and stalling tactics to make their books look a little better for a couple of quarters. so the insiders can sort of make their deals, wring what they can out of the company, get the best possible price for their own shares, et cetera, et cetera, et cetera. But I think we know where this is going, guys. There is really no unique selling point with Carvana. All their data and all their machine learning and all their advertising has not ever let them make $1. And they've been in business almost 10 years. They're not moving toward profit. I just don't see it happening. They have no unique selling point, in my opinion. Car vending machines are just a stupid waste of money. And while they might have been a good marketing gimmick, you actually have to maintain and pay rent and all the stuff, all the costs. So you just have to add all those costs into every car you sell. And that's why you're never going to make any money, because it's like a stupid vanity thing instead of building a strong foundation and a good business model. It's all flash, no cash, baby. It's all filler, no killer, to paraphrase some 41. Guys, that's the Carvana stock. This thing has done a big short squeeze. There's still a big short on the stock. Which way is it going to break? Obviously, this little channel is pretty phony, but the stock, the golden cross here, the 50-day just crossed over the 200-day a couple of days ago. The stock has continued to trade just sideways since that point, when it popped back up again today. So this stock could rally, guys. Think it could. The next pivot point, guys, after 25 is like, I think, $31.50, and then there's some resistance at $50. So if people keep buying, if it keeps squeezing, you could definitely see this stock challenge the $50 mark. There's a huge short on it. There's not that many shares to go around. There's a ton of action and a ton of eyeballs on the stock. Guys, what are you doing? You buying, you selling, you holding, you trading? Are you crazy enough to hold this thing long term? Am I completely wrong? I have been so far, and I probably will continue to be in the future. Guys, my name is Danny Deals. The show is Un Poco Mas. The stock is Carvana Company, ticker symbol CVNA. Toper time check, 3:45 p.m. out here in beautiful Los Angeles, Pacific Standard Time, June 22nd, 2023. I'm not a buyer of the Carvana stock. Wouldn't touch it with a 10-foot pole. But again, the people buying it for a swing trade on a short squeeze could have just done extremely well. And if you made money, more power to you. Congratulations. I'm not mad at you. Guys, we are going to sign off right now, and we will check back in on the Carvana stock when things swings up or down violently, as it tends to do. You guys have a great day. Talk at you later. Bye bye.